Being broke is such an inconvenience. You're not able to enjoy the finer things in life or invest for your future. Instead, you are living paycheck to paycheck, most likely if not certainly buried in debts. You just never seem to have enough money to meet your expenses, and there's just one thought going round and round in your head. How do I stop being broke? Well, you're not alone. As of June 2022, 61% of Americans, that's a staggering 157 million adults, are living paycheck to paycheck. Crazy rise in inflation, increasing interest rates, and a myriad of other economic factors are causing financial distress amongst working class of all income levels. But that's not all. There's more to it than just economic factors, one of which is having poor money management skills. Now, before we dig deep into this, please understand that being broke doesn't necessarily mean you have no money or less money. It is a common misconception that only low-income earners are broke. While it's partially correct, the reality is they're not the only ones. Studies have shown that 36% of people in America who are earning more than $200,000 per year are reportedly living paycheck to paycheck. Now, why is that despite earning above average income, why are they still broke? It's because these 36% of people are struggling to manage their finances and are most likely spending above their means, and are just barely covering their living expenses. Being broke has nothing to do with the money you make. It has more to do with how you manage the money you make. Doesn't matter if you earn $500,000, if you are spending all your earnings on lavish lifestyle to make yourselves look rich, you will remain broke. At the same time, there are people who are earning a lot less than $200,000 per year and still living a financially healthy life. Purely because they make the most of their money, they don't splurge unnecessarily and use their money to save and invest responsibly, so that they never have to experience a broke lifestyle. Now, good money management skills are tricky even under best circumstances, and it can get trickier as you earn more money. Logic dictates that you earn more, spend less and save and invest the difference, but with the rise in inflation and distractions like social media that entices you, tempts you to spend all your hard-earned money on the many comforts and luxuries life has to offer, you end up buying things that you don't really need, and more importantly, can't really afford. And as a result, you are stuck living paycheck to paycheck. The good news is, being broke isn't permanent. You can always improve your financial situation, but it requires some solid dedication and planning on your part to develop good money management skills. So keep watching this video to understand how to take control of your finances and break the cycle of being broke. Especially the last point is so crucial. But before we continue further, if you've enjoyed the video so far, do consider subscribing to our channel Atlam, where we discuss all things life and money. We are constantly working to upload such informative and educational videos to help you guys better your lives. Having the right mindset. We always believe that before you begin any journey, it is extremely important to have a right mindset. Now, being broke can be very tough, especially mentally. You are easily prone to seeing negative in everything. It is very likely you are stressed and your mind is occupied with negative thoughts, like, I can't do anything about it, or the situation is beyond my control. This is nothing but an indication of a broken mindset, and breaking out of which is not very easy. But it's not impossible either. With a bit of determination, you can shift your mindset to positive thoughts, which will help you go a long way in improving your financial situation. After all, you always have a choice to do something about it. For example, rather than thinking, I never have enough money, or I am broke, try to inculcate thoughts like I need to earn more and reduce my expenses, I need to clear off my debts, or I will improve my financial situation in a year's time. Cultivating such positive thoughts will only serve as a motivation when you are trying to improve your financial situation. Set goals. Now that you have sorted out your thought process, it's time to assess your financial situation and set goals for yourself. Understand where you stand financially and what you want to accomplish in the coming months or years. While we encourage you to have long-term goals, it is equally important to set short-term goals that work towards your long-term goals. Not only will this keep you motivated, it will also provide a sense of accomplishment. Also, we have mentioned in our earlier videos, try to avoid setting vague goals like I want to earn more or I want to be rich. Instead, set goals which are measurable. For example, you can set goals like in 6 months' time, you want to invest $2,500 in either stocks or REITs. And to support this goal, you can set a few short-term goals like, I will start saving approximately $500 each month towards this goal. I will educate myself on stock markets and REITs to understand what to buy as a beginner. This way, with each month's accomplishment, you will be getting closer to your long-term goal. Plus, you are also giving yourself sufficient time to do your study and research. Create a budget tracking your expenses. Ever heard the saying, too many people spend money they haven't earned to buy things they don't want to impress people that they don't like? For most broke people, this is a reality. It's very easy to overspend without budgeting. Research has shown that people who don't budget often lack clarity on where their money is going and are more likely to spend more than they should. Sometimes it is for our own indulgence, like using our credit card to buy an iPhone 14 even though our old phone works perfectly fine. Sometimes it's to impress others, like selling your 3-year-old car to buy a new one on loan. Just because your office colleague bought one a few months ago, and you also want to look the part in your office circle. With such careless spending, if you are not already broke, sooner or later you will be. Creating a budget will help you develop healthier money habits. It will keep your finances in order and avoid wasteful spending on things that you really don't need. If you have not been budgeting so far, which by all logic you should, set aside some time and create one. If you are struggling to do it by yourself, no worries. There are many helpful budgeting apps available on Google Play Store or Apple Store. As mentioned in my previous video, Mint, YNAB, Fudget are some of the best budgeting apps. Think of it as a tool to help you understand exactly where your money is being spent, and then you can assess your expenses and spending habits, and see if there's anything you can do to improve your financial situation. You'll be surprised to learn some of the ridiculous expenses you've been paying which could have been easily avoided, like the gym membership fees which you seldom use, impulsive shopping of products you don't really need, unused subscriptions, or ordering takeout frequently just because you feel lazy to cook at home. Now bear in mind, budgeting doesn't mean that you completely stop spending on your wants. It only means that you take the expenses into consideration and understand whether your current financial situation permits you to spend on those wants. If your potential purchase cannot be accommodated in the budget, then stick to your budget and refrain from spending money on that purchase. Be disciplined and don't sacrifice for momentary pleasure. Also, another tip is to try to build a tentative budget on a yearly basis rather than a monthly basis. For example, apart from the regular utilities, housing, food, and transport expenses, try to incorporate some big expenses that you will have to spend on later in the year and accordingly start accumulating money towards that. For example, if you have to pay $500 towards car insurance later in the year, or you have to spend $400 on air tickets to travel to your parents' place for their, let's say, anniversary, take that amount into your calculation. You can divide this expense by months and start saving accordingly. Avoid bad debts. Debt can be a good thing if you know how to use it to your advantage, but for people who are broke because of their credit card debts or loans taken for car, house, or education, it's time to think about what you can do to clear off your debts, as it can really hamper your chances of getting ahead in life. Consider paying off debt via the snowball or avalanche methods, wherein the snowball method involves paying off small debts, first to give you some respite as you pay off debt. Avalanche method, on the other hand, involves paying off debt with higher interests. Regardless of which method you choose, pay off your debts, improve your financial situation. More money for you, less misery for you. Now we understand paying off your debts is a lot easier said than done, cause if it was this easy, you would have done it already. In reality, it requires a planned approach and more than often, certain sacrifices at your end. Sometimes in the form of personal time or family time, wherein you're forced to take up a second job to pay off debts, or sometimes downgrading your lifestyle to save some more money, like shifting from a one-bedroom apartment to a studio apartment. This is something me and my wife did for a couple of years to get out of our debt. But whatever it is, the bottom line is, unless you know how to use debt to your advantage, you need to pay it off. To escape the broke lifestyle, better to make some sacrifices now and be debt-free as quickly as possible. Just an additional tip, we'd recommend paying off credit card debt first, as they have the highest interest rates, plus comparatively smaller amount to other debts like mortgage or auto loan. Just to give you some numbers, as of September 2022, the US credit card debt hit an all-time high of $930 billion, and the average APR, that is the annual percentage rate, for brand new cards is at an all-time high of just under 19%. And if you are someone who does minimum payment and carries a balance from month to month, it'd be wise to pay it off on priority. Consider signing up for a balance transfer credit card wherein you can transfer debt from high-interest credit card to balance transfer cards that offer 0% interest for up to 21 months. Earn more income. Reducing your spending is a good way to improve your financial situation, but sometimes your spending is not the problem, it's your income. While lowering expenses is always important, you can't alone rely on it, as you can only reduce so much. Eventually, you'll get to a point where you'd want to increase your earnings. Granted, it's not easy, but if you can manage to get higher earnings, plus reduce expenses, plus live responsibly on a budget, your broke lifestyle will disappear even faster. Now, there are several ways you can improve your earnings. You just have to figure out what's the most effective way for you. Perhaps now is the time to negotiate a raise at your current job. But if you feel the growth is going to be stagnant, you can consider switching to a job that pays more, which is often a quick fix to earn more money. If this is not attainable, you could always look to develop some skills people are willing to pay for. It could be writing, blogging, coding, or whatever that is high in demand. You could then monetize your skills on freelancing platforms such as Upwork or Fiverr. Build emergency funds. Building an emergency fund is super essential when you're trying to avoid being penniless. In fact, not having one can easily entangle you into broke lifestyle. You could be forced to drain your bank account to pay for the unavoidable expenses. How many times has it happened that for a few months you have been very disciplined and in control of your expenses? You are making steady progress in improving your financial situation, but are not saving for any emergencies, and then suddenly, BAM! You have financial emergencies like house or car repair, unexpected job loss, or some unavoidable medical expense. All of this can leave a huge dent in your wallet, and you may very well use your credit card or take up an unnecessary loan to meet your expenses, which you really can't afford. And as a result, all your progress of past few months go to waste, and you only end up cementing your place further into a broke lifestyle. On the other hand, having an emergency fund will serve as an insurance and avoid adding any debt in case of any unforeseen circumstances that may come your way. Most importantly, it will keep you from being broke. Many personal finance experts recommend to save up to 3 to 6 months of your expenses in your savings account. But the last couple of years have been so stressful, especially due to the pandemic, that you wouldn't be wrong in trying to save up to 9 or even 12 months of your expenses. Regardless of how many months you plan on, bottom line is you absolutely need an emergency fund, as it will save you from financial disaster. So start saving until you have a proper emergency fund in place. It will make your plight nothing more than an inconvenience. Now, we hope today's video will give you the motivation to get started on improving your financial situation. But motivation alone is not enough. You'll need to have self-discipline to escape being broke. Remember, motivation is what gets you started. Discipline is what keeps you going. Do subscribe to our channel for more content like this. Till next time, hope you guys have a lovely day.